Nike continues to soar. It's adding about 54 points to the Dow right now. The Oregon-based retailer reporting earnings very strong last night. A $15 billion share buyback program, stock trading at all-time highs. It's actually now up 30% for the year. Joining us now is Barclays retail analyst Matthew McClintock and Cowen retail analyst John Kernan. John, the setup going into these Nike's results was pretty strong, already trading at multi-year valuations, and now we've got an 11% jump in the stock. Was the quarter that good? In other words, is it justified?
Yeah, sure. Hi, Sarah. Thanks for having me. Quarter was that good, and I think if we go back to a point in time, Nike was a lot cheaper right ahead of its investor day in late 2017 when Matt and I got to go out to Beaverton, see the coming innovation, talk to management, and actually hang out with Kobe Bryant for a little bit. The stock was only 20 times earnings at that point. It's gone through a big period of multiple expansion here, and the stock is not that cheap anymore. It's now close to 28 times forward earnings. We see better value in its competitor Adidas, which is only trading 20 times fiscal 20 earnings. But Nike's strength really out of China drove upside to our model. We think everybody else's model last night.
All right, we'll get to Adidas in a moment. Matthew, what are you doing to your target and your rating on Nike? How much more upside is there in this stock, which is already soaring to the top of the Dow this year?
Yeah, so Sarah, we raised our price target today to $85 from $80. We had actually raised our price target to $80 from $75 before the quarter, going into the quarter, because our channel checks were strong. Clearly, those channel checks were valid as there was significant upside in the quarter. When you think about Nike, let's just come down to what it really is. This is a company that is growing, a discretionary company that is growing revenue double digits. You don't have that many discretionary companies growing revenue double digits in the world, much less a company the size of Nike, a $130 billion market cap company, or approximately around there, growing at that kind of rate. So when you think about valuation, you have to think about that in the context, that multiple, that 30-time multiple, in the context of what this company is, where this type of growth is, and the fact that we're only at the beginning of this. We're just now starting to accelerate. So what you're seeing right now in growth, it could get substantially better.
What about China, Matthew? 35% revenue growth in China. Clearly, that's a big part of the beat and the story. Is that at risk if the trade tensions escalate? Just how exposed is Nike to China from a consumer point of view and a manufacturing point of view?
Yeah, so it's a good question, Sarah. It remains to be seen.
Nobody asked it on the earnings call. You guys should have asked management last night.
Yeah, well, there's no answer, to be honest with you, because we don't know what is going to happen with either tariffs. We don't know how China's going to respond to tariffs. We have no understanding of that. I mean, it was just a year and a half ago, if you recall, that we were talking about border adjustment taxes, and what happened to that? Completely went away. So I think for the time being, until we get some clarity around the subject, you have to just focus on what Nike is and what the growth is. And the one thing that I can say that's kind of unique to Nike versus other American companies that are going into China, that are selling products in China, is that Nike has very unique product. If you want to get the new Peg Turbo that's coming out, and I highly recommend you get it in rose gold, your favorite color, when it does come out, if you want to get that shoe, you're going to pay for that shoe, because you can't get that from Adidas, and you can't get that from anyone else. I will say, I lived in Brazil, and Brazil has some of the highest tariffs in the world. Shoes and Nike shoes in Brazil that cost $120 here cost $500 US there, and yet people still buy those shoes because you can't find that product anywhere else.
I love that he knew that rose gold was my favorite color. A+.
Just like Greenspan told you the other day, it's a consumer-driven market. That's despite the tariffs run through it, the consumer decides in the end. John, on share, I'm looking at shares of Nike year to date, up 30, as Sarah said, but Under Armour up 60. So what's happening in the mix there?
Yeah, sure. Well, Under Armour declined by about 2/3 over the course of the past year and a half as they went through a restructuring in their brand. Lost some of the heat that it had before. We're market perform on Under Armour as well. Still think that Nike is leading the market right now with their triple-double strategy of 2x innovation, 2x speed, 2x digital. They're clearly ahead of the competition right now in the digital space. They're clearly ahead in the supply chain space. And right now their innovation, like Matt said, is very impressive. They're bringing the Nike Air platform, the retro stuff, the new stuff, the Vapor Max. All of it has been very successful. Then you add on the cushioning platform, the Nike Epic React, which has stolen a lot of market share from the Adidas Ultra Boost, and it's been a powerful mix of product for Nike. And we think that their product cycle right now, heading into back to school and holiday, is far ahead of competitors. But the stock reflects that at roughly high 20 times PE multiple on forward earnings. We'd rather look you had a cheaper, out-of-favor name like Adidas right now. It's trading only 20 times fiscal 20 earnings and has a better product cycle coming.
Even though they've lost share this quarter to Nike in terms of those products you mentioned. Matt, final question, what's going on with the Jordan brand? That was a weak spot in terms of the overall sales numbers.
So Jordan brand, look, it was a weak spot in or fiscal 2018, which we just completed. But the company actually did mention on the call that that's over. Jordan is now in an inflection point. Jordan is now positioned for growth. They had some problems with Jordan in fiscal 18. They've solved some of those problems. Recent channel checks, recent data points that we've gotten from some of the newer Jordan models is you're starting to see 30% plus growth year over year in select Jordan models week by week. So the proof is in the pudding. We're seeing those numbers come through at point of sale. And so we are very bullish on where Jordan can go going forward, not just in footwear, but also in apparel.
Nike shares now up 12.6%. Thank you guys for joining us. Matthew McClintock and John Kernan.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.